Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Saleh El Hattab, founder and CEO of Gravity, as well as Aidan, Madigan-Curtis, partner at Eclipse. We're here to discuss driving profitable sustainability across investment portfolios and why today's companies must prioritize climate and energy investments that build economic resilience. It is great to have the both of you with us. And Saleh, I'd like to kick it off with you. And I think part of the challenges with emerging technologies, of which climate tech is one of them, is reactive compliance versus proactive action, because there is a challenge with getting that framework in place.
Yeah, absolutely. First of all, thanks so much for having me, Jill. I'm thrilled to be here. Yeah, from our perspective, there is always going to be evolving regulation, and there's always going to be an aspiration by some to align themselves with that. But for something that's going to be evergreen rather than kind of centric on the tides of the time, we think that at the end of the day, sustainability is actually a two-sided coin. On the one side, it's emissions, and of course, we want to measure that. But on the other side, it's energies and cost. And as a result, if people actually align themselves to focusing on their total energy consumption and the sources that it's coming from and optimizing that, it's going to align to classical business priorities indefinitely. It's cost, it's risk mitigation, and in that way, as frameworks evolve, you'll still be doing something that will be highly aligned to sustainability, but less potentially aligned to a short-term geopolitical element.
Mm-hmm. Yeah, and I want to discuss that some more, Aidan, because when you think about the societal benefits for a company, it's not just simply about reducing emissions or getting to net zero, right? There's also a societal component that goes into it. And sometimes when we have to wait around for policy or regulation or frameworks in place, sometimes you lose part of that mission while you're trying to implement the technology to get this off the ground.
Jill, we are in an energy crisis. The US is predicted to grow from 5,000 terawatt hours consumption of energy today on an annual basis to over 11,000 in the coming next couple of decades. We are already facing rolling blackouts, grids that have, years-long, decades-long interconnect queues to get things like critical data centers up to feed our AI ambitions of the future. We just don't have the infrastructure, and the infrastructure we do have is failing. It's ossified. So what we're most excited about at Eclipse is investing in a wide array of technologies that change the way these current physical industries work. And you can think about it as both energy infrastructure, whether it's getting fortified transmission lines like we could have used out in Houston. So horrible to hear about some of the tragedy happening out there right now. Or things like what Saleh is looking into in terms of really practical ways for industrials across the board to both be much more energy efficient through better uses of cooling and HVAC, and ultimately to decarbonize through those types of new technologies.
Yeah, and Aidan, I think that's part of the challenge, though, for investors. It's like the horse before the cart. We have the technology as an example for electric vehicles, but if we're lacking in, public utilities or the infrastructure, you can have all the product you want out there, but I mean, at the end of the day, the infrastructure and the energy demand needs to be met.
100%. As capital providers from the private markets, we are doing everything we can to rally the troops, to encourage more founders, and we are seeing more founders than we've ever seen before coming out of the woodwork, coming from B2B SaaS, coming from completely different industries to begin to pick up the shovels and help to solve these problems. Everything from new electrochemistries for battery storage for renewable energy, so we can make of the infrastructure we are putting in place with solar and wind, so we can actually make use of that through better, smarter, safer storage. And we have a company like that in our portfolio called Peak Energy. To many other different types of technologies, not only in energy, but also in things like smarter manufacturing, different ways of actually bringing, sort of a more modern approach to manufacturing, a less carbon-intensive approach to manufacturing in the country. So I do think technology plays a huge role. On the private market side, we're doing what we can with the dollars that we have at play. And I also think there's a huge role for the kind of regulatory moves that we've seen on behalf of the government too.
Yeah, well, it's encouraging to hear. You don't want to stop innovation just because regulation doesn't exist or infrastructure doesn't exist, because then you're taking two steps back. So, my question to you is, how do you get investors to move beyond analysis paralysis, and they're thinking about what's their ROI, what's their their expenses going to be to get to a more climate tech friendly place?
Yeah, I love that. And I also just want to echo something that you asked and that Aidan said, which is that it's a myth that energy consumption is going to go down, and which is why so many times we talk about energy efficiency being one lever, but also cleaning up the sources of energy. The good news is, or good news, bad news, I was going to say. The good news is that taking action that ends up being helpful from a sustainability perspective is actually incredibly aligned to reducing costs and risk mitigation. When we look at the volatility of energy prices, or the volatility of energy sources like natural gas over the past few years, there are some parts of the country that had energy double for them year over year in terms of cost. And that, especially for an energy intense company, is a massive cost center that they can't just have be so randomly oscillating. And so making the case for ROI here is actually just common sense. It's a better thing to lead with than to align to a sustainability framework or otherwise. Don't get me wrong, all those frameworks are absolutely critical. And a big thing that we do at Gravity is make sure that we can automate that process as quickly as possible so that you can focus on the real action and ROI projects. But there's so many low-hanging fruits that sometimes take that initial kind of foray of collecting the energy consumptive data for the sake of emissions and quickly identifying actions that you can take. We have handfuls of clients. I'd love to give you examples of how they've actually been able to take action within 6 months, even that ends up more than justifying the investment in carbon and energy management. But it's actually a common sense decision rather than having to convince somebody out of analysis paralysis.
It's interesting, Saul. You bring up a great point, and this reminds me of how it correlates to being able to effectively communicate to the board and to the C-suite to prioritize cybersecurity. As an example, it seems as things that could potentially be, the cost side of the balance sheet is sometimes harder to communicate that. So when you're thinking about whether it's risk management from the client perspective, because, just like with cybersecurity, these things have to be reported now. And I wouldn't be surprised if we start to see climate reporting being part of that, public company calculus. So what's your advice to those that are developing climate tech strategy when they're effectively communicating to the board or to C-suite that we need to, invest in this because the ROI and the compliance is going to mean something down the road?
Yeah, I love that. I guess the blatant truth is that sustainable reporting is not going to go away, whether or not the frameworks that we've heard today or whatever the SEC is currently working on is going to end up being the canonical way that people report. What is going to be a bellwether here is going to be the actual disclosure. So one thing that I always recommend to people is make sure you don't strap yourself to a single horse or acronym. Make sure that the way that you're collecting your data actually isolates the original data, the kilowatts consumed, the therms or BTUs of natural gas, and is a software platform that can actually translate it into any framework given the evolving regulatory landscape. We were all kind of waited with bated breath when the SEC teased that they were going to disclose something a couple years ago. It's been delayed, it's been diluted, but it doesn't change the fact that something is coming, that CSRD in Europe has actually taken effect, and there are so many other frameworks that are causing this to be a reality. So my suggestion is continue to monitor your energy consumption, which is where all your emissions are. Do it in a way that's automated and software-based so that you can translate it into whatever framework, and don't wait until it's too late. Things are going to be a lot harder to do when regulation is truly, truly upon everybody. Getting set up for this proactively is only going to make that day a lot easier for you.
Yeah, kind of reminds me.
And Jill, if I could jump in here, I would love to echo Sal's point. So first of all, one of the reasons we invested in Gravity is because you can't fix what you don't measure. Physical industries are over 85% of global GDP. They're over 75% of GHG emissions globally. And we wanted to invest in a team, and Sal is being very humble here, but a team that could actually build tools, leveraging their backgrounds that got seamlessly and immediately into some of these large producers of greenhouse gas emissions to actually effectively push and create change. So we're excited about Gravity because it's seamless, it's easy to use, and not sure if we mentioned it, but both Saleh and I have a background at a company called Samsara, one of the leaders in industrial IoT. We know what it's like to work with the largest industrial players in the world and to build them highly effective technologies. So that's why we're excited to invest in Gravity. We want to see this change happen. It needs to happen today, and we think Gravity is a big part of the solution.
Right, and let's talk about that some more for a moment here, Aidan, because you have noted here that the bottom line benefit is being strategic with the approach, which is why I, alluded to Aidan before how you effectively communicate that. But I think if I were the one making those decisions, and how do I quantify this? Because it can be subjective, what you think is a great goal and what I might be able to execute on. So I want to hear about the eco report, apologies if I pronounce that wrong. You're finding ways to be able to put, measures of value around it.
Totally. Yeah, I think the other thing I would comment on about the last conversation tied to this question is that we never expect companies to do anything that's not going to drive shareholder value, right? So anything that's nice to have, even if it's good for the world, is not, squarely in the crosshairs for, we're investors, right? We care about shareholder value. We believe that measuring your energy and measuring the corresponding greenhouse gas emissions that are produced by that energy usage is critical to driving a bottom line for investors. And what we love about Gravity, what we love about our Eco Report is that by bringing new forms of technology into these traditionally highly carbonizing spaces, you can radically change the carbon footprint or the energy utilization footprint of traditionally extremely energy hungry industries. When we took a look at a handful of our portfolio companies that are pushing the frontiers of manufacturing automation, of autonomous and electric driving, of autonomous flying, of energy storage, we realized that we could actually change the whole US energy consumption or sort of greenhouse gas emission on the order of almost 4% in a matter of decades, just based on the changes that these types of companies are making in those types of industries. So it is a huge bottom line adder. It is a shareholder value driver to be extremely analytical about your energy consumption and about the emissions and carbon created around those analytics.
Yeah. Well, Aidan, let's take a step back here for a moment and identify trends that you see evolving in climate technology. I think we talk about reducing emissions and decarbonization, but it's not something you can necessarily feel or touch. Like you can look at a car from 10 years ago and see the technological process in the product now. So explain to us what some of those trends are and what some of the ultimate goals.
Sure. One of the things that I think is super fascinating is the role of data centers and what they're going to do to power, so much of the intelligence we see coming. So data centers are measured by gigawatt hour, megawatt hour. They're measured by their power consumption. It's sort of essentially what's happening in a data center is electrons are moving around, right? And cooling or energy consumption, cooling is actually 40% of the data center's power consumption. So one great example of the types of investing trends that we're looking into is everything from how do you create microgrids to, support leveraging a better renewable footprint, a better net zero footprint, those types of data centers, and also how do you leverage smarter technologies for things like cooling in data centers to really move the needle on power consumption overall, and as a function of that, carbon emissions.
Right. And so I'd like to get your perspective on this too, in terms of the climate technology realm, and then how AI and automation are going to increasingly improve certain aspects, whether it's operational efficiency or creating new technologies.
Yeah. Yeah, absolutely. So first, I like to simplify the surface area for action when it comes to decarbonization, all these buzzwords to four plain English categories. One is energy efficiency, and for that you can think about the nests in our home and the equivalent for industrial environments. One is electrification, and you can think about taking combustive vehicles and turning them into electric ones. Then there's generation and storage as a category, and then ultimately a long tail of really difficult industrial processes. Each and every single one of those first three in particular have cost curves that are aligned to common pragmatic action. And so many technologies that over the past 2 decades and even recently have been developed on in a way that make them just what you should actually be looking into. I think when the Nest first came out, just to look at consumer markets, people were, I think, initially reticent, confused by it, and now it's strange to go into a home that doesn't have a smart thermostat. And the benefits of it are not only quality of life, but actually an optimization of 30% of your energy consumption on HVAC, right? That is powered by intelligent set points and temperature management. So in that case, you can see how advancements in artificial intelligence, advancements in technology are actually accelerators of a lot of the tools that end up optimizing energy consumption. And if I get into a electric vehicle, the number of computers in that actually are fundamental to how it decides to be energy efficient, letting you know how to charge it, are a critical piece of the kind of DNA of electrification and decarbonization. All that being said, I would be remiss if I didn't acknowledge that we're building more data centers. And as you heard from Aidan, we need a significantly more amount of energy to get there. And that's why the sources of energy is actually also critical. It's not just the game of energy efficiency, generation, storage, and being able to have a significant surface area of things like solar energy in the US or wind powered energy as the grid needs to transition to greener sources is another fundamental piece of the solution.
Right. And from a more enterprise perspective, tell us about a use case where a global utility company is using gravity as technology.
Yeah, absolutely. We're so proud of this use case. And a Midwestern utility working with both citizen as well as commercial and industrial clients actually manages the cooling loop for the city, a condenser loop that basically keeps all the stadiums, all the massive pharmaceutical manufacturers cool through the especially kind of volatile seasons of the Midwest where it's hot one day and cold the next. We found that a lot of these systems, not too dissimilar from homes prior to Nest, were operating in a fairly, call it, let's dumb way. Dumb because they weren't leveraging artificial intelligence and other kind of intelligent set points. Without actually having to up and replace a massive HVAC system, retrofit solutions that take advantage of existing infrastructure, but just up level them with intelligent management of temperatures, managing downstream kind of power of fans to actually be able to reduce the cooling system's consumption by 30%, translate into double-digit million in the savings for these entities, as well as significant reductions in carbon consumption. So that's an example of like the energy efficiency pillar and something that not only balances your checkbook, but ends up being really fantastic for your sustainability initiatives.
Yeah. And Aidan, I'd like to wrap up with you here for a moment, going back to how you can quantify this return on investment and why it's financially the right decision. You know, climate tech kind of falls in that ESG category, which of course could be highly contested depending on, you know, how you feel about it. But Texas, for example, they are one of the biggest investors in wind power. I mean, that's kind of counterintuitive in my mind.
Counterintuitive, but necessary. You know, Texas also has an extremely vulnerable grid. And I think the population in Texas has spoken that they want to see change. And I think that Texas, in many ways, is a microcosm for the whole country. As I started off with, we are facing the radical growth in energy demand. And if we don't bring modern technologies to the table, whether it's in our manufacturing footprint, in our transportation footprint, in our supply chain, in our energy transmission generation, and things like storage, which are critical to be able to make the best use of some of our natural renewable resources, we are not going to be able to power our country effectively, stay competitive, and achieve our national priorities. We believe there's a huge ROI in that, especially as early investors and growth investors who are happy to jump in and take risks with people who have big ideas for how to solve these problems. And that's what we do at Eclipse every day.
All right. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.